Ladies and gentlemen of the crypto space, we're live on Thursday, December 31st at 11:30 a.m. We nailed it. It's New Year's Eve, perfect timing, and this is the best time of the year to figure things out for the new year and try and understand how to make the best decisions possible. That's why you all join me. We have tough decisions. These are financial decisions. These are non-trivial decisions. These are serious decisions, and these are not easy decisions. So we have to make decisions based on logic, rationality, and most importantly, data and prevailing narratives, prevailing sentiment. One second. Really? It signed me out. One second, guys. Sorry. That's ridiculous. I'm literally on a stream and YouTube signed me out. That's crazy. One second, guys. Okay, back in action. I wanted to make sure that I had the chat up. All right, so I got a lot of content. I got a bunch of Twitter posts that I found quite interesting. I have, we're going to look over Bitcoin because that's pretty much all we really need to or should be talking about at this point. Going into the new year, we want to be able to preserve our wealth and grow our wealth and not take unnecessary risks. That's the whole point. That's what I like to hammer home. Today's topic, Bitcoin all-time highs, why it would go up or down. We're going to look at the technicals. We're going to discuss the prevailing macro narrative and understand why it can't just keep going up. And, there's strong arguments for both directions. And we're going to draw comparisons to the equities markets, particularly because those markets are just irrationally exuberant. They've gone up past the point of there being absolutely no reason for them to go up, yet the equities markets keep going up. Now, the crypto space might actually have a strong narrative. It's because they're keep going up, but at least there's a reason for them to keep going up. There's an unholy reason for the equities markets to keep going up, but there's a righteous reason for the crypto market to keep going up. So we're going to dive in. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, either non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see what's going on. Let's check out who's in the stream. Argo Glass in the house. Crypto Chick, always a pleasure. 2021, thank you all. I appreciate it. Rick G. Brady, a pleasure. Today's New Year's Eve. I've been far. This is definitely the rabbit hole, my friend. You are absolutely right. George says, hello, Noah. What's up? Graham says, what's up? Good job all year. Thank you very much. I hope I've been able to make a difference in people's decision-making capacity. I provide the logic and rationality to make better decisions. I need to learn well and fast. That's right, Brady. We all need to learn, and we're all always learning. And I myself am far from the smartest person in the room, and I'm learning from people that are much smarter than me. This was a nice tweet that I saw earlier. Apparently, I've had some success in folks doing well because of my ideology, my thought processes, and my analyses of the various markets that we talk about. NK Nikosi, maybe? .eth. Oh yeah, purple milk. You're very welcome. So let's go over some content that I see, and we'll start with that. So CoinTelegraph, as more people hodl Bitcoin, the more scarce it becomes. If Bitcoin liquidity dries up, we can see a massive swing in price to the upside. $30,000 might get trust sooner or later. No doubt that's a headline. $30,000 is a very specific number, but the concept at hand is illiquidity and supply disruption and the prevailing narrative that people are accumulating Bitcoin not to trade it, not to liquidate it at a higher price, but because they're opting out of the system. They're opting out of a fiat system that you are guaranteed to lose 8 to 12% of all your money every single year. If you busted your butt, worked so hard to save $100,000, you're going to lose $12,000 just by having your value stored in dollars. And this is a topic we've discussed. It's supported by the Chapwood Index. I mean, even the CPI at a couple of percent, and the odds are next year that thing's going to be running hot 3, 4, 5, 6%. Wouldn't be surprised. So even the Federal Reserve data is going to end up showing that you're losing your value. As I've said many times, and I might as well repeat, you do not care how many dollars you have. You care how much you could purchase with your dollars. So if this year a car costs $50,000 and next year it costs $55,000, that's a 10% increase in the car's price, which means you have lost 10% of your purchasing power. And if it helps you understand it, that means next year you have lost 10% of your money. Let that sink in a little bit. It's very important. So Tyler's obviously one of the co-owner with his brother of Gemini Exchange. They some of the most successful Bitcoin investors of all time. They've been in the game a long time. They run Gemini. This is a nice statement. But this time it won't end in the Great Depression. If you own Bitcoin, if you own fiat, it'll be another story. So Elon's talking about the Roaring Twenties. The Roaring Twenties was basically a period that I don't overwhelmingly understand. I understand it vaguely, a little bit of rhetoric here or there. Lynn Alden will probably talk about it the best. But it was a time of great prosperity. And what is prosperity? I mean, some would argue, at least to my vague understanding, it was a time of great monetary monetary uh, not manipulation, but at least application of monetary powers. Maybe there was a huge amount of fiscal. I don't know, but I'm guessing because he's drawing the analogy to what's going on right now, and basically what's going on right now is the largest fiscal stimulus experiment in the history of the world. Never before in history has this quantity of fiat money been put into circulation. It is historic in all regards and is overwhelmingly going to be detrimental to the functionality of the system, whether people realize it or not. That's the most important thing. It's not showing up overwhelmingly in public facing inflation. Goods and services, no doubt, are losing or are inflating about 8 to 12% per year. And that was prior or the early part of 2020, definitely last year. It's assuredly the case after another $2.4 trillion print and expenditure and debt and deficit of fiscal year 2020. 2021 is going to be filled with inflation that is public facing. Now, here's the most important thing. Inflation is relative, ladies and gentlemen. So you're talking about the inflation of prices. What do you think equities are doing? They're inflating relative to the dollar and now cost you countless more dollars to buy a share of Tesla. The price has inflated. Now you're seeing what's going on. The price of Bitcoin is inflating. It is costing you more money. It's the same thing as a loaf of bread going from $5 to $10. The price is inflating. And the price is inflating because of supply and demand properties where supply exceeds demand. Let's jump on the chat and see if I'm missing anything. Off-topic question, is dark node income subject to taxes? Yes, if you withdraw it. If you do not withdraw it, it is not. Now that BTT is almost 30% this holiday season, my family is taking my involvement in the internet money more seriously. Everyone needs to take this more seriously. This is the most important financial and technological innovation probably in the last 100 years. This is something that people thought was going to change everything a couple of years ago, 2017, 2014, during the last runs, but that was periods of irrational exuberance. This time it's very different. You have the largest traders and hedge funds in the world saying the narrative, talking about using it as a store of value, it's relatively risk off. The supply is going to be less than is going to exceed the demand is going to exceed the supply, and we're going to have a liquidity event to the upside. And this is what Plan B talks about in his documentation and his various charts and analyses. It should be one heck of an event this year, and probably for the next couple years, at least according to what the data suggests. Is there any point in holding fiat on your balance sheet? Even though Bitcoin is at a new all-time high, it looks like a good trade. So here's the deal. You need enough fiat to cover bills. Fiat is a great tool, a perfect vehicle for fulfilling debt obligations. But fiat is not, it technically doesn't fit the definition of money anymore. The US dollar does not fit the definition of money. The definition of money, you could Google it, but it's pretty much the transfer of value and the store of value. So it doesn't store value, period. So by literally the dictionary definition of money, the US dollar is no longer money. So that's something to keep in mind. There's no specific quantity of money you need. What I would argue is rational is you need enough money to cover your bills and expenses in case of a worst case scenario. You need to be liquid. You need to have the money available if you need it. And you got to remember, if you have value stored in Bitcoin and other assets, you're not going to want to liquidate those assets in the face of needing fiat to fulfill a debt obligation. Doesn't that make sense? So you want to keep enough cash on the sideline so you never ever need to or want to liquidate your hard money value storage. Then obviously we've talked about all this here, how to extract value and use your hard money value storage to generate money and how to access equity in it without ever liquidating your hard money value storage. Without ever selling a single Bitcoin, you can access the value in your Bitcoin. You can use your Bitcoin to generate a recurring revenue stream. And all you have to do is keep accumulating Bitcoin and you're going to keep making more money. This is the way it works. What do you think the large companies have done with treasuries for the last 100 years? They accumulate treasuries, they lend them out to generate a revenue stream, they use them as collateral to create a collateralized debt position. It's the same thing with Bitcoin, and that is what has emerged in 2020. People are able to use these assets that have asymmetrical price appreciation potential. One, they could substantially go up in value, which is the fancy way of what I just said. And two, they're going to make you money without ever having to sell them. That's what 2020 has shown us. That is what has been proven. Heirloom says, morning. Hey, Heirloom, always a pleasure. Does Gemini sell DeFi coins? Yeah, there's a couple of things on Gemini. You check out the list. The DAIs on Gemini, from what I know. It's pretty cool. Get yourself a VPN and trade on Binance. Yeah, I don't know about that crypto chick. I don't know. Binance, not your keys, not your crypto. Stop trading. Why are you guys trading? Non-custodial exchange, use Change Angel or use DeFi, Uniswap, Oneinch Exchange. There's absolutely no reason to use an exchange other than as a fiat on-ramp. But I would use just Square Cash, not PayPal. You're not going to be able to extract your Bitcoin, but you could use Square and you get your Bitcoin. They'll give it to you right away. You withdraw your Bitcoin, you have it in 20 minutes. Brady says when they see it as a career option, that will be the day. Yeah, well, I see it as a career option for myself, a personal career option. I look forward to, the odds are in the next 1 to 2 years, I will have a capacity to replace my entire current employment income with a revenue stream derived from my investments. That is my goal, and that is what I am tracking to achieve in the very short term. Heirloom says you only have Binance US. That's right, Binance US. Stop wasting your time at Binance. It's ridiculous. Binance is safe. Don't get me wrong. It's just you're wasting your time dealing with deposits and withdrawals. It's just a silly old way of dealing with things because when you go to just go to Oneinch Exchange. You have your MetaMask. Here's your MetaMask. It's a Chrome plugin. You install it. Chrome plugin, MetaMask, and watch. It's going to load. It loads. Here's your money. You take your Ethereum, and then, I have some Oneinch tokens. I have 2.5 Ethereum in there. You go over to the exchange tab. This is a website. You can trade whatever you want for whatever you want. And it goes from your wallet to your wallet. It never leaves your wallet. There's no deposits and no withdrawals. Centralized exchanges are history. You can literally trade an asset for an asset, never leaving your wallet, boys and girls. Anyway, Heirloom, a while back, Binance was hacked. Yeah, I'm not worried about that. They make so much money. They make a fortune off people. The trading fees, they make an absolute fortune. And that's the problem. DeFi, we make the money. You're able to provide liquidity to these protocols, and you get the transaction fee. Check this out, boys and girls. Let me show you something. So you're going to trade on Binance, but are you guys providing liquidity to Oneinch Exchange? And watch the APY show up. Are you getting 124% per year on your liquidity that you deposit in Binance? 116%? Come on, guys. 1,000% for ETH and Chi. Damn. Should provide some Chi liquidity. That's an incredible rate of return. And everyone knows if you go over to Curve Finance and you provide liquidity, you're going to be getting significant numbers as well. Look at these numbers. 12% right now in the compound pool, boys and girls. 5% on the USDT pool. Let's check 3 pool. 3 pool is running around at 2.19%. Come on. These are real numbers. This is real interest. Binance is giving you jack shit. Yeah, no, I'm not. So Crypto Chick says you're right. No, I'm not saying anyone's doing anything wrong. I'm just saying it's to consider that there's better ways of doing things, ways that benefit people more. There's ways to extract liquidity. There's ways to make money, and nobody is going on Binance and literally setting up limit orders. I would imagine most people in my stream are not setting up limit orders and stop losses and trading like 50 trades a day and scalping. No, nobody's doing. You guys are exchanging one asset for another. You guys aren't trading. You're exchanging, which is the entire DeFi movement, where you no longer need a company to facilitate an asset exchange. You literally are able to interact with software to exchange one asset for another with no company in the middle. It's historic. Nathan's in the house. Always a pleasure. Heirloom, security question. I have a MetaMask, but I tried to add a purchaser, but it requested my seed phrase and I stopped. What is a purchaser? And your seed phrase should never, ever, ever be entered anywhere that sounds like someone tried to phish you or hack you. Nathan finally used Change Angel. Not bad, not bad. Yeah, Change Angel's a good deal. They do the deal. They were around way before DeFi, so Change Angel's good. Change Angel, non-custodial, or DeFi, or nothing at all. You're wasting your time on exchanges. It is much more complicated to use Binance than it is to use Oneinch Exchange. Just a matter of a 15-minute learning curve, boys and girls. Yeah, Myth's on fire, Crypto Chick. Myth is on fire. It's an algo stablecoin. Yeah, you can be careful. I'm not, it's cool. It's good to experiment with these financial monetary policy experimentations, but there's great risk, as we've seen with Cover and countless other DeFi protocols this year. So never go all in and never spread too thin. You want to play around with these systems predominantly because you want to experience them. You need to click shit, boys and girls. I got a strong feeling that a lot of people listen to me, but they don't necessarily start clicking shit. So you got to start clicking stuff. So that's good to hear. It's good to click stuff. Just don't take on too much risk. We are risk off. I advocate risk off because we're going to make a huge amount of gains off Bitcoin alone. You don't need to take the risk. Heirloom, I'll try Oneinch today. That's right, my man. Give it a try. Click a couple buttons. There's nothing to lose. You put $15. You have $15 in your MetaMask. You play around with a couple of dollars. You don't need to play around with $1,000. You play around with $5, $1. Play around with $1 worth of stuff and just make a trade. Click some stuff, and then you're gonna be like, oh, that was easy. Crypto Monk, what's up, Noah? Why is there a warning of high slippage on curve for depositing Ethereum? Oh, that's because the SF pool is highly imbalanced. You're lucky I know what's going on. So look at the massive imbalance. There's 14.9 that's it. 14,900 Ethereum and 5,500 SF. So it's a significant imbalance. So you're going to pay a premium to deposit more Ethereum into the pool. Now there's a massive incentivized yield for this pool. But well, that's a significant 48% per year. But that's a massive slippage to deposit it, no doubt. So I'm not quite sure what to recommend in that regard. That's your choice. I think you're going to get better bang for your buck if you have any 1-inch tokens laying around. You throw it in the 1-inch ETH pool, which is yielding. Here, check it out. I think that was. Let's refresh that page real quick. I don't know anything about Nix, my friend. Sorry, Nathan. Let this load real quick, and I'll tell you guys that. I want to look through the rest of these Twitter posts that I picked out, and then I want to go to the Bitcoin chart. Let's see if the APY loads. Didn't we just see it at like 100% APY? The APY is through the roof, but here, this is a farming pool. This is an incentivized yield liquidity pool. So 1-inch ETH is currently providing 236% APY denominated in 1-inch tokens. Absolutely through the roof. Let's go through the rest of them. That was Tyler's post. So whale alerts, what you're seeing is, this is called an outflow. 1,000 Bitcoin, $28 million moves from Coinbase to an unknown wallet, which basically means to a personal wallet. That's the way this works. You also see stuff like this. Here, this is outflow. 500 Bitcoin moved from Coinbase to an unknown wallet. What you're experiencing here, everyone, is a liquidity event. People are accumulating. They're not selling. They're removing supply from the market. There's less supply to meet demand. That means people have to pay more to convince people to sell them their Bitcoin. That's the way the price goes up and down. 9,999,000. $10 million transferred from the USDC Treasury to an unknown wallet. This is called value inflow. Someone has collateralized whatever and was able to mint $10 million, and that means $10 million is entering the markets. Maybe it's Ethereum, maybe it's a DeFi space, given that it's a USDC token. Or maybe it's going to go to Bitcoin. If it's Bitcoin, 10 mils a drop in the bucket. But whatever, point being is dollar inflow is good to see. Bitcoin outflow, this is all consistent with a raging bull market. Here, this is important. A headline on CNBC. How the pandemic drove massive stock market gains and what happens next. So the pandemic drove massive stock market gains by allowing the federal government to print countless trillions of dollars, whether they wanted to or not. This is what they did. The countless trillions of dollars all went to asset price inflation. Because they only gave people $1,200 and now they're giving people $600. So the only thing that's going to happen for the general public with regard to consumer staples and services, that the public facing inflation is as a result of that amount of money that is put into the circulation of people. The rest of the $7 trillion went to banks and basically facilitated the largest asset price inflation in the history of the planet. Let's check this out and I'll show you exactly what I mean. Now we go to the weekly on the SPY. And we drop it down and we zoom it in. And then we zoom it out. Whoa, look at that, boys and girls. Let's move it up. Let's move it over. So this is what's going on. This is the largest asset price inflation in the history of any financial market in the world. And this was the pandemic dip right here at the top. And then it just ripped to the upside because they blew the cap off the fire hydrant and just soaked the market with more dollars than ever in history. M2 money stock. Let's check out this chart real quick. I want to show you this. Not to get too technical, but this is an important chart. It substantiates or at least tells you the source of why everything is going up, up, up in price. So basically, in the history of money, and there's so much more data that's better than this. They blew the top off of money. This is the amount of money that's indicated by this rip to the upside is larger than it's like 30% of all dollars in history was printed this year. They flooded the market with an astronomical. $1 trillion is the size of the largest target you've ever seen from floor to ceiling pallets of $100 bills. Put that into perspective and then picture 7 of them. That's how much money they printed out of thin air. Floor to ceiling, largest target you've ever seen, $100 bills. Bam. So that all went to the equities markets, as we saw with the S&P 500 chart, and that is all going to flow to the crypto space because this is a risk-off safe haven. There's potential for downside. Let's get into that. We have about 4 minutes left, and I want to wrap it up soon. Our wallets necessary. My wife's in the house. Hi, Eve. So are wallets necessary? Which wallet do you recommend? Asking for a friend. So I go with the Ledger wallets. That is my preferred technology of choice. They had a recent security breach for information leak, but that is separate and apart completely from the hardware that they produce. The hardware that they produce is by far the most user-friendly, easy to operate, and functional hardware of the crypto space. You can use Ledger with MetaMask. You could use Ledger with countless pieces of software, DeFi, no doubt, and it's overwhelmingly secure. So that's part of the not your keys, not your crypto rhetoric. Do you need a hardware wallet? Nowadays, interestingly, I do say Gemini is on another level. Gemini and Coinbase is about to go public on the stock market. So these boys have institutional grade custody solutions. The problem is you need two-factor authentication, you need good security, you need a U2F key, you need a YubiKey. You should have a YubiKey for your Google account. You should have security on the forefront of your mind, not just because you're involved with crypto assets, but because security is incredibly important. SIM swap attacks, phishing. No one wants people to get access to their Gmail account. That's an invasion of privacy and it's horrible. So get a YubiKey, get a Ledger. You don't need to necessarily, if you're using Gemini or Coinbase and are using proper security implementations. Those are institutional grade corporations. They're basically the Wall Street of the crypto space. And as long as you have a huge, strong password, a large password, I recommend something like LastPass. So it's extremely sophisticated, substantially randomized, alphanumeric, as well as special characters. That's my wife. I love you. Heirloom, need to get these assets off an exchange. Too tempted to take profit and buy Ethereum. There's no such thing as taking profit. You need to redefine what profit is. Taking profit in what denomination? Your goal, if you choose to accept it in 21, is to accumulate Bitcoin. Your goal is to use that Bitcoin to generate revenue. Your goal is to use that generate revenue to create more Bitcoin holdings. Your goal is to not sell Bitcoin, but to use Bitcoin to make you money in the future. That's the name of the game, and that's what we're going to continue to hammer away into 2021. You never have to sell your crypto. Your crypto is going to be your business. Your crypto makes you money. That's a lot of fiat bills, Brady said. Crypto chick, hey, that's my wife, that's my lovely wife. Always a pleasure. Interesting. Found the Atari token, newbie I am. What do you think of it? No idea what it is. Do you have any thoughts on whether the tools on Curve could be a future target of FinCEN and the SEC in some way? Possibly, but it's like Uniswap. Uniswap is effectively decentralized. There is no legislation on the planet that could do anything to the Uniswap protocol. Did you know that Uniswap v1 is still online? So There is nothing that any regulatory authority on the planet can do to affect the current implementation of Uniswap. Um, they could probably try and prevent people from continuing development, but there's no modification, no changes, no way to affect the current implementation that's deployed on the Ethereum blockchain. It is effectively decentralized. Now, Curve, depending on their level of decentralization, is possibly susceptible to legal action, but I'm not quite sure the fear there. Are you fearing that applying liquidity to Curve is at risk in some way because of potential legal action? I would argue apply a small amount of liquidity to the Curve protocol. Let's go over to Curve and I'll show you what's going on there. Apply a small amount of liquidity to the Curve protocol, $5, $10, and feel comfortable and use it. And know that you could take your value out within 10 seconds. You're in complete control of your assets all the time. For instance, I'm earning 12% per year plus an additional 22.63% denominated in Curve, because I've provided liquidity to the compound pool. Here's basically the rundown. And then you have CRV emissions and you have the whole admin fee, all that fancy stuff. Let's go over here for a second. So as you can see here, nothing special. A nice little balance, 52,000 providing liquidity. That's pretty cool. That's all borrowed, ladies and gentlemen. That's all a debt position from the Oasis. We've gone over this topic before. We've gone over that. We'll get into. I'll remind everyone in the new year how you're able to take your Bitcoin, receive programmatic debt, and use that debt to make money. Except you never ever have to sell your Bitcoin. That's the name of the game, boys and girls. 12:02 p.m. New Year's Eve, December 31st, 2020. I wish everyone a wonderful new year, and we're going to start this new year's off right. We're going to make the best decisions possible. I want everyone to think about all the most important questions they have in their mind. Get your friends and your family to ask you questions, and you can bring them to me if you don't know the answers. And I'm more than happy to talk about anything, because what's most important is we make the best decisions possible. We make rational decisions. You stop gambling. You can't just buy. You can't just sell. You have to do it for reasons. Oh my God, 1203. I didn't look at the Bitcoin chart. Let me give you a quick rundown. All right, so Bitcoin has been ripping pretty much along the 200 EMA for the last couple of days. We've had a massive rip from 23,000 all the way up to 28,300, then followed by a mean regression to the 200 EMA. A little bit of weakness. This is where the weakness made me feel like it could break to the downside real quick, but then we pulled for another leg up. We have another mean regression that's going on right now after a rip to the upside, 29,342. There's very much all the story, all the reason in the world for this to keep going up. There's technical reasons for it to go down. If we go over to the weekly chart, and my chart wasn't messed up, here, whatever, the chart, here. Look at this weekly chart on Bitcoin. Absolutely incredible to look at. But look at the RSI divergences. So the RSI is in very uncharted, very historically rare territory here, as you can see here. So it's very rarely this high. But what is the RSI indicator in the face of $7 trillion of money printed, ladies and gentlemen? The difference between 2017 and 2020 is as profound as ever. 2017 was retail fear of missing out. 2020 is a story of the largest corporations and hedge funds in the world accumulating Bitcoin because they want to opt out of fiat. They don't want to play anymore. They don't want to lose money to depreciation and the inflation of fiat. Thank you, fiat. I opt out. That's what I wrote on Twitter yesterday. That's a big thing. And now the largest corporations and hedge funds are doing that. If you haven't followed Real Vision, find Raoul Pal's videos. Listen to Linda Alden if you're interested in a more technical interpretation. She's a Bitcoin advocate, but she's prudent, an investor, extremely strategic, extremely analytical, and extraordinarily rational. Raoul has an enjoyable tone to the way he describes it. He's he'll smile when he say he has a massive position and he's all in on Bitcoin. So brings good personality to the hedge fund look of value being applied to the crypto space. Follow him on Twitter. Find him on Real Vision. So look at this chart. So obviously we're at all-time highs. Previous all-time high peak here was in 2017. We're currently sitting at 28,495. Let's pop it back on the 15 min. Oop, let's do. Sorry guys. 2 seconds. Oop, let's do that. Expand, expand, expand. Okay. So, this could break to the downside. It's very rare for these low time frame 200 EMAs to hold up for such a long period of time. Absolutely incredible to see. And look, as you can see, the 3 min has already broken to the downside. So we are on the defensive on the shorter time frames. So we could see additional bearishness. And what happens if we see additional bearishness? We're on the third. We look to the next 200 EMA to the downside, and as you can see, next. Price. Next major resistance to the downside could be about 3% to the downside. Let's pop it out to the 1 hour. So there is a lot of support here. It's actually quite impressive to see. So on the 1 hour, you could maybe see a 6.8% dip to the downside if you get even more bearish. So mean regression, ladies and gentlemen, that's basically gravity. That's basically natural laws of physics taking over as everything wants to revert back to the mean. And when you have a bearish action, a bearish event, things regress to that mean because of the gravity. And then algorithms and human emotion jump in, telling people to start buying. And this is what these charts tell us. They tell us the mean average of human behavior. You might see this chart as data, but this is really a mass psychology chart showing you the cumulative result of people's choices and actions. It's quite profound when you think about it from a philosophical and psychological perspective. Let's pop it out to the 4 hour real quick and give you guys an even longer mean regression. Mean regressionists would probably think we're due for a very large mean regression, given how overextended we are from the longer time frame averages. So a 20% dip to the downside would be on the 4 hour 200 EMA, put us at $22,411. Given that the previous all-time high was $20,000, we're still 10% above the previous all-time high if we hit a large mean regression on the 4 hour. The daily is going to be one heck of a mean regression. Let's zoom out real quick. That's going to be big. And there we say the weekly. But bear in mind, look at Tesla. Oh my God. I'll show you guys this real quick. I know we're going over, but this is some interesting stuff. So you guys are talking about Bitcoin is overextended, whereas the daily for Tesla. You guys got to see this. There's nothing like this chart. Let's go to the weekly. You can't even see it on the daily. Oh, zoom out. There we go. Zoom over. So here's Tesla on the weekly. So basically, this thing is so far deviated from a 200 EMA. If it rips to the downside for a mean regression, you're talking about a 74% loss of value. So do you think this is going to happen? No, the Federal Reserve has completely backstopped the entire system. They'll never let a destabilizing event occur, in my opinion. Anything's possible. But the same thing is juicing the crypto markets. I think if asset prices and everything looks like this, S&P and Apple and Microsoft and all of these wonderful names, the charts have nothing to do with reality. At least with Bitcoin, if it goes up, that has to do with the reality of opting out. So there's a story and a narrative to be told about Bitcoin just going up. And the only thing that would bring it back to reality and gravity is technicals. But the system isn't operating on technicals right now. It's operating on emotions and fear and stuff that has historically not played a role in the equities or the crypto markets. Long-term opting out of the financial system. Yeah, Brady says Bitcoin smells like a good buy. Call me crazy. Listen, dollar cost average. If you've never been in crypto, you buy $50. If you're just getting in, if you're telling a friend or a family member to just get in, buy $50. If it goes down, you buy another 50. If it goes down, you buy another 50. And allocate a certain amount of value to keep accumulating. And guess what? What's the most important is not the dollar value of the Bitcoin, it's the quantity, the total number of Bitcoin that you have, because you're able to leverage those Bitcoin to make you revenue. So at some point in the future, if you have enough Bitcoin or have enough crypto and you're strategic enough or crafty enough, you don't have to work. You can have your money work for you. Volume is declining, that's right. Heirloom, still buying Bitcoin, waiting for a dip that isn't coming. So that's the whole thing. If you don't buy now and it goes up, that's pretty disappointing. So the only appropriate course of action is to buy now, um, and buy a small amount. And if it goes down, you buy more. And if it goes up, you buy more. And that's exactly what a lot of the popular Twitter personalities always talk about. They're just always buying because the goal is to accumulate as much as possible. Therefore, the rationale is to always be buying, whether it's going up or down, just that if it's going down, you're going to own more. And if it's going up, you're going to own a little bit less. But all that matters, ladies and gentlemen, is the fact that you will always own more because you're applying fiat to buy something that is valuable. Because fiat is not valuable, it's valueless. You will pay anything for fiat. You will give anyone for any item. The first thing you think of is fiat because you could care less about dollars because dollars do nothing for you. They don't do anything. They earn no interest and they lose 8 to 12% of value per year. Ladies and gentlemen, the crypto space, let's wrap this up. Thank you very much. I wish everyone a safe and enjoyable holiday. I will catch everyone on the flip side. Smack those thumbs up buttons. Tell everyone to subscribe. And I will see you on Monday. Y'all have a good weekend. Peace.